Video, we'll be going over IRS Form 1045, application for tentative refund. So most taxpayers will never use this form. This is a form that you would use if you have either a carryback or an overpayment of tax that you would like to apply to a previous tax return. So individuals, estates, and trusts will generally use Form 1045 to apply for a quick tax refund resulting from one of the following. A, the carryback of a net operating loss. B, the carryback of an unused general business credit. Or C, the carryback of a net Section 1256 contracts loss. Or D, an overpayment of tax due to a claim of right adjustment under Section 1341B1. So again, not many people will use this form, but if you do have one of those carrybacks or tax overpayments, then you would use this form. You would file it separate from your income tax return so that you can get a faster refund from the Internal Revenue Service. Generally, you would need to file this form within 1 year after the end of the year in which an NOL, a net operating loss, unused credit, net Section 1256 contracts loss, or a claim of right adjustment came up. Although if you were affected by a federally declared disaster, you may have additional time to file your Form 1041. In that case, you should go to the IRS website. There's a section on disaster tax relief that shows you all of the different ways that the IRS provides tax relief for people in a declared disaster area. However, if you're filing in 2022, you should not file this before your income tax return. You will need to file this form with the IRS Service Center for the place where you live, as shown in the tax return instructions, but you will need to mail this in a separate envelope. Do not attach it to your tax return. And the form instructions contain a detailed list of attachments that you may need to send in accompaniment with your completed Form 1045. So for individuals, you would need to send your 2022 Form 1040 or pages 1 through 3 of your 1040 SR and schedules 1 through 3, Schedule A, Schedule D, Schedule F, and Schedule J, if any of those apply. You also would need to send in Form 4952, Investment Interest Expense Deduction, attached to your income tax return, Form 461, Limitation on Business Losses, any Schedules K1, K2, or K3 that you received from partnerships, S-corps, estates, trusts that contribute to your carryback, any applications for extensions to file, all Forms 88, 86, reportable transaction disclosure statements that were attached to your tax return, possibly Form 8302, electronic deposit of a tax refund of $1 million or more, any alternative minimum tax net operating loss statements, or your Form 6251 AMT for individuals for each loss year. The form instructions contain additional guidance. You may need to double check those instructions just to make sure that everything applying to your particular situation is covered. Things such as Form 3800 if you're claiming a general business credit, Form 6478 for biofuel producer credits, Form 6781 for gains and losses from Section 1256 contracts, or Form 3468 investment credit. For estates and trusts, you'll attach copies of your Form 1041 with all accompanying schedules and any forms, computation sheets, or elections previously stated for individuals. The IRS form instructions state that the Internal Revenue Service will process your application within 90 days of the later of either of these two. 1, the date that you file the complete application, or 2, the last day of the month, including the due date for filing your income tax return. So one thing to keep in mind, the processing of this Form 1045 and the payment of the requested refund does not mean that the IRS has validated or determined that your claims of deductions and credits are correct. If the IRS later determines that your deductions or credits were due to an overstatement, negligence, disregard of rules, substantial understatement of income, you may have to pay tax additional penalties, as well as an additional tax with interest compounded daily. The IRS may also need to contact either you or your designated representative for more information if your application is not complete. You may find that you can claim a refund by filing an amended tax return on Form 1040X instead of Form 1045. In fact, you must file 1040X instead of 1045 for the following carryback items. 1, any items to a Section 965 year. 2, a prior year foreign tax credit released due to an NOL or a net capital loss carryback. And 3, a prior year general business credit released because of the release of the foreign tax credit. So just keep in mind that the procedures for filing Form 1040X and Form 1045 are different. The IRS does not promise that they will process your 1040X within 90 days. However, if they do not file your 1040X within 6 months from the date of filing, you can file suit in court. There are additional guidelines if you need to pursue that. So we'll go step by step through this form. It's a 5-page document. The first 2 pages are the Form 1045 itself. On the back, there's a 1-page Schedule A for net operating losses, and then on the back of that is a Schedule B for any net operating loss carryovers. We'll go through this step by step. Not all of these will apply to most tax situations. In fact, it would be very rare that everything that could apply actually does apply. So we'll walk through that step by step. As you can see, I've pre-filled this form a little bit. However, this is simply for illustrative purposes and not reflective of any tax situation. So in your situation, you may have to sit down and actually do some computations to figure if your numbers are correct. In this instructional video, these numbers are simply placeholders. So at the top of the form, you'll start by completing your taxpayer information as shown on your tax return. So if you're married filing jointly, you'll put your spouse's social security number under your own, your name as shown as on the tax return, followed by your address and a daytime phone number. And if you live in a foreign country, then you would enter the foreign country name, province, and postal code there. For illustrative purposes, I simply put in some numbers for a net operating loss, which you would have to determine from your Schedule A, line 24. Just for information, I will be reading a little bit back and forth from the form instructions. as this can be a little complex. Also keep in mind that a net operating loss generally isn't going to be carried back if it's a net operating loss arising in 2022. There are exceptions to that apply to either farming losses or certain casualty insurance companies other than life insurance. So there are certain rules that apply to farming losses. For example, if you have a farming loss but you have not elected to waive the carryback period, then you must carry back the entire loss to the second tax year before your loss year. And then any loss not used in that second preceding year is carried to the first preceding year. And we'll kind of walk through that a little bit. So for illustrative purposes, I put $1,000 net operating loss here. In section B, or line 1B, I put down $500 as a unused general business credit. You would find this on your Form 3800, which is the form used to calculate your general business credit. And then on line 1C, net section 1256 contracts loss. Now you can carry back a 1256 contracts loss to each of the 3 tax years preceding the loss year. However, estates and trusts are not eligible to make that election. So if you plan to do this, you're going to need to check on the instructions for Form 6781, which is the calculation for net 1256 contracts loss. For here, I just put a placeholder of $500. And then in line 2A and 2B, there's no guidance in the form instructions, but you would simply write in, if your tax year is not the calendar year for 2022, then you would write in what your tax year looks like. And then as a placeholder, again, I just put in a date in February of 2023 that I presumably filed my original income tax return. And again, you should not file your application for tentative refund before you file your income tax return. For line 3, if applicable, you would enter the first year of your carryback if this is an application for an unused credit created by another carryback. And then in line 4, if you filed a joint return or a separate return for some but not all of the tax years involved in figuring the carryback, you would list the year or years filed and then specify each year whether it was a joint or a separate return. So I wrote in 2020, parentheses J. You could do 2021, parentheses S. If there's a Social Security number for a carryback year that's different from what you've input up above, then you'll need to enter that Social Security number and then the tax years. If you had a change in accounting period, then you would annotate the date that the IRS gave you permission to change your accounting period. And then 7 through 9, these are yes/no questions. Whether you filed a petition in tax court for the years to which the carryback is applied, is any part of your decrease in tax due to a loss or a credit from a reportable transaction that you would be required to file Form 8886, reporting reportable transaction disclosure statement. And then finally, if you're carrying back a NOL or a contracts loss, did this cause the release of foreign tax credits or the release of other credits due to the release of the foreign tax credit? And again, there's specific information in the form instructions. For example, if an NOL or a 1256 contracts loss carryback eliminates or reduces a prior year foreign tax credit, you cannot use this form to carry the released foreign tax credits to earlier years. Also, if those tax credits result in the release of general business credits, then you can't use this form to carry the released general credits. So if you're playing with multiple different carrybacks or business credits, definitely take some time to read through the form instructions so that you're familiar with how these credits and carrybacks, carry forwards might have impacts to each other. Because all of that is going to come to play when you start computing your decrease in tax. So up here, I followed the instructions for, or the example in the form instructions. I simply pre-filled this form by outlining in the computation of decrease, you have 3 columns for years preceding the tax year. So in the first year preceding the tax year, we'll just assume this is a farming operating loss, so you can carry back as far as your second preceding year, and you're going to carry this farming loss back to 2 years. So second preceding tax year ended in 12/31/2020, and then in the middle column, your first preceding tax year. Obviously, if you have different rules that apply to your situation, follow those rules. If you need to insert a third preceding tax year, that would go in this column. Your second would go in the middle, and then finally your first preceding year would go into the final column. So starting with the column on the left, you would need to use the IRS instruction rules for how carrybacks are entered. And again, there's a general rule about not carrying back NOLs that came to light in 2022. One of the exceptions is farmer loss income. So I just input some of these numbers as if we're going to go through that. So in line 11, I simply put in an AGI of $50,000. And then in line 12, I entered the standard deduction, which for that year is $24,800. You subtract the difference, and you get $12,000 or $25,200. Now, under line 12, you do need to be cognizant of the impact that any carrybacks might have on itemized deductions. So if you have itemized deductions that end up being impacted by your carryback, for example, after the carryback, we carried a $500 loss. Oh, yeah, sorry, we'll make that a $1,000 loss. That is now a $1,000 loss to your AGI. If for some reason that impacted an itemized deduction that's calculated as a percentage of your AGI, then you need to recalculate that under line 12. So you may have to refigure medical expenses, mortgage insurance premiums, personal casualty and theft losses. And although they are suspended through 2025, if they do come back, you would also have to recalculate miscellaneous deductions that are subject to the 2% AGI limit. And then you would also need to refigure any QBI deductions by going back to your form 8995 or 8995A and their related schedules. If the carryback year is a taxable year beginning after 2017 and before 2026, there is no limitation on itemized deductions. So you can have as many itemized deductions as you want. You just may need to recalculate them if they're based on a percentage of AGI. So after the carryback, that's $49,000. Now the taxable income drops down to $24,200. And then your income tax, you can calculate this income tax on your own. You do need to include any tax that was included on forms 4970 or 4972. 4970 being the tax on accumulation distribution of trusts, 4972 being the tax on lump sum distributions. At any point, you will need to attach an explanation or schedule. You can simply write, for example, in the IRS form instructions, tax computation worksheet, and then the tax year. If that's the method that you used, you don't need to attach any more detail. You can simply explain the method that you use to calculate the tax. In line 17, excess advance payments for premium tax credit or child tax credit. If this applies to you, you should use the Form 8962 for the premium tax credit and the instructions to refigure the amount of your premium tax credit or advance payment of that premium tax credit, as well as any excess premium tax credit. So you would include any excess premium tax credit on line 17 for both the before carryback and after carryback. So let's imagine that you had a $500 credit that would appear on both sides of the column. And then for alternative minimum tax, any carrybacks of either an NOL or a Section 1256 contracts loss may impact your AMT. So for individuals, you would use Form 6251 to calculate your AMT. Again, you may not be subject to AMT, but you do need to complete the form to determine whether or not you have AMT that applies. And then estates and trusts would use Schedule I from Form 1041. On line 19, you simply add lines 16 through 18. I'm not going to do that for this video. However, you can do that on your own. In line 20, you'll enter the general business credit. And again, you'll need to enter in the after carryback column any recalculated general business credit. And again, you're going to have to go back to IRS Form 3800 to see what impacts there were to your general business credit. For line 21, the net premium tax credit or child tax credit. So if you claimed a premium tax credit in either 2019, 2020, 2021, you'll need to complete a new Form 8962 using your new refigured household income. And then after carryback, you'll enter the new recalculated tax credit for either 19, 20, or 21. You can include child tax credits on line 21, but refer to the form instructions for that particular carryback year if you need to do any recalculations. For line 22, you'll identify and enter other credits. You'll have to verify on your tax return, but a partial list includes earned income credit, credit for child and dependent care expenses, education credits, foreign tax credit, retirement savings contributions credit. That's a partial list, but refer to your previous tax return for more detail on that. The total credits, you'll add lines 20 through 22 to arrive at the total credits. This total you'll subtract from line 19 above. And then in line 25, you'll enter any self-employment tax, which the form instructions specifically state do not need to be adjusted because of a carryback. And same with the additional Medicare tax. Do not recalculate any additional Medicare tax simply because of a carryback. For line 27, net investment income tax, you'll need to enter in the after carryback column any recalculated NIIT that you determined on a new Form 8960, net investment income tax, for the applicable year. If you have questions about how to do this, then you would need to look at the form instructions or IRS Internal Revenue Code 14, Section 1411, and the related Treasury regulations. Line 28 is grayed out as it's reserved for other use. In line 29, you would have to go back to your tax return to see what other taxes for that year that were not previously mentioned but might apply. So these could be recapture taxes, taxes on IRAs, things of that nature. If you make an entry on this line, then you need to identify the type of taxes that apply. For line 30, you'll enter the total tax, which is the sum of lines 24 through 29. In line 31, you'll enter the amount from the after carryback column on line 30 for each year. So if your total tax ended up being $10,000 here after the carryover, then you'll enter that number here. And then if your original tax liability ended up being $15,000, then you would subtract the difference to arrive at a $5,000 decrease in tax, right? Obviously, these numbers don't jive with a $1,000 credit, but this is for illustrative purposes. This shows the net decrease in tax. For line 33, if you overpaid any tax under Section 1341 B1, then you would simply enter that number and attach the computation to the form itself. And then after that, you sign, and your tax preparer, if necessary, signs below. If you are filing a joint return, then both spouses must sign and date the form. So you'll need to use the Schedule A NOL to determine the amount of a net operating loss that is available for carryback or carry forward. So for line 1, you'll start with, for individuals, subtracting your standard or itemized deductions from your total gross income and entering it here. For estates and trusts, you can enter the taxable income that was increased by the total of charitable deductions, income distribution deductions, and exemptions. So let's put down that you had $100,000 in income before AGI, or after AGI, after you've subtracted your deduction. For line 2, non-business capital losses before limitation, you'll enter any losses as a positive number, but do not include any Section 1202 exclusion amounts, even if that appears as a loss on Schedule D of Form 1041. Any non-business capital gains would go in here. If line 2 is more than line 3, enter the difference, otherwise enter 0. So let's imagine that you had $1,000 in losses, but you had $2,000 in gains. You would enter 0 here in line 2. However, if you had $2,000 in losses and you had $1,000 in gains, then this would be a $1,000 loss. If line 3 is more than line 2, then enter the difference. So in that first situation, we would zero this out and we would put the $1,000 here. For line 6, you have a series of non-business deductions that you may add that are not related to a business entity. directly from the form instructions. This list includes your IRA deductions, health savings account deduction, Archer MSA deduction, deductions for payments on behalf of a SEP or self-employed individual to a SEP, simple or qualified plan, any alimony paid deduction, and again, because of the relatively recent change in the deductibility of alimony, you should refer to the IRS guidance on alimony depending on that date, the date that your divorce was finalized. Most itemized deductions, except for the casualty and theft losses from a federally declared disaster and state income tax on trade or business income. And then finally, your standard deduction. There is a long list of items that you should not include on line 6. And these are deductions that the IRS considers to be connected with a trade or business, such as state income tax on income from a trade or business, educator expenses, moving expenses for members of the armed forces, the deduction for the deductible part of self-employment health insurance, the deduction of the deductible part of a self-employment tax, rental losses, loss on the exchange or sale of a business real estate or depreciable property, share of a business loss from a partnership or S corporation, ordinary loss on the sale or exchange of small business stock, otherwise known as Section 1244 stock, ordinary loss on the sale or exchange of stock in a small business investment company operating under the Small Business Investment Act of 1958. Loss of the sale of accounts receivable if such accounts arose under the accrual method of accounting, and finally, casualty or theft losses resulting from a federally declared disaster. So in line 7, you will enter any non-business income other than capital gains. Do not include any business income on line 7, which might include salaries and wages, self-employment income, unemployment compensation, rental income, gain on the sale or exchange of business, real estate, or depreciable property, or your share of business income from a partnership or S corp. From here, we'll simply start combining according to the instructions. So in line 8, you'll add lines 5 and 7. So if we had $10,000 of non-business income outside of capital gains, we would combine these two to arrive at $11,000. Let's imagine that we had $10,000 of non-business deductions. So if line 6 is more than line 8, you'll enter the difference here. In this situation, it's 0 or it's negative, and line 8 actually is greater than line 6. So we would enter the difference and then double check with line 5 to make sure that it doesn't exceed that, right? So if this was 12,000 and we were inclined to enter 2,000, we would have to double check and make sure that it doesn't exceed the number in line 5. And it does, so we'd have to bump that back down. Now, if this situation was reversed and this was the $12,000 figure and line 8 was the $10,000 figure, then you would have a $2,000 figure go into line 9. So that's how you manage lines 9 and 10. For line 11, you'll enter any business capital losses before the limit. Enter this as a positive number. So let's imagine that you had $5,000 as a business capital loss. And business capital gains, you would, let's imagine that you have $2,000 in business capital gains, you would add the numbers in lines 10 and 12 to arrive at number 13. And then from here, you would subtract line 13 from line 11. If this is 0 or less, then enter 0. Then you'll go back to line 4, grab that number. In this case, it's 0. But if there was a positive number, you would carry it down. You would add it to line 14. You would come up with the number that you enter into line 15. For line 16, you're going to enter any loss, if there is one, from your 2022 Schedule D on Form 1040. For estates and trusts, enter any losses from line 19, column 3 of your Schedule D from 1041. Enter this loss as a positive number. If you don't have a loss on that line and you don't have a Section 1202 exclusion, then you can skip lines 16 through 21 and you enter the amount from line 15 onto line 23. So this would be, now this happens to be your net operating loss deduction for losses from other years. You can enter this as a positive number. And then you would use that and combine it with all of these other lines to come up with your net operating loss. Let's go back for a second and let's just imagine that you did have a loss on Schedule D of $1,000. In that case, you would start with determining if you have any Section 1202 exclusion. This is based on the sale or exchange of qualified small business stock. For this video, we'll just assume that there is none. We would subtract line 17 from line 16 to arrive at our $1,000 loss. Then we enter the loss from line 21 of Schedule D. For estates and trusts, it would be from line 20. Enter this number as a positive number. So let's just say that there's a $500 loss here. Now if line 18 is more than line 19, you would enter the difference. In this case, it's 0. If line 19 is more than line 18, you would enter that difference here. So that's $500. And if the situation was reversed, then the $500 number would go here, while 0 would go in line 21. And then from here, you'll subtract line 20 from line 15. In this case, line 20 from line 15 is $2,500. So we'll enter that here. If this was 0 or less, then you would enter 0. And again, any net operating loss deduction for losses from other years, you would enter this as a positive number. And then on line 24, you'll combine lines 1, 9, 17, and 21 through 23. So as it currently stands, let's go up. We have line 1, line 9, so this is 102,000. We have 0, 0, 104,500. So if the result is 0 or less, you enter it here and then on page 1, line 1A. Line 1A. So that would be the number that you actually use for line 1A. And then you use that number to inform the rest of the carry forwards. In this case, since this number is greater than 0, you don't have a net operating loss. Schedule B, if you need it, is used to figure your net operating loss for each carryback year and the amount to be carried forward if it is not fully absorbed. So you'll need to make the same entries in each column as on page 1 of this form. So we'll do the same thing. And then on line 1, for the second preceding year, you would enter the amount of the 2022 farming loss, for example, carried back to the second preceding tax year instead of the amount from line 10. So instead of this number, you're going to enter this number here. For line 2, you're going to enter the taxable income before the carryback. So according to the instructions, you should not account for any carryback in this line, any carryback from 2022 or later in this line. However, you should account for net operating losses occurred in tax years before 2022, and it would be otherwise allowable as carrybacks or carry forwards. So let's just imagine that you had a $1,000 deduction, and then you had another $1,000 net operating loss that could be a carryback or a carry forward. Then in line 3, you would enter any positive amount under net capital loss deduction. So for individuals, this would be the amount from line 21 on your Schedule D. If it's for a 2019 return, then it could be for your 1040 or 1040 SR. For estates and trusts, it's the number that's on line 16 of Schedule D. For line 4, we'll assume that there's, we'll call it a $500 net capital loss. Section 1202, this would be entered as a positive number, any gain that you excluded on the sale or exchange of small business stock. So we'll just imagine that you didn't have any small business stock transactions. For line 5, you're going to enter your QBI deduction from section 199A. This again is a positive number of the amount of any QBI deduction and domestic production activities deduction from specified agricultural or horticultural cooperatives. So again, if you're doing farming, this might be a little bit more applicable. For most taxpayers, probably not. So for more guidance, you'll probably need to actually dig into the form instructions for either 8995 or 8995A, depending on which form you use to calculate your QBI deduction. Under line 6, you'll if you entered any numbers in lines 3 or 4, then you're probably going to have to recalculate certain income and deductions that were based on AGI. So this might include, and again straight from the form instructions, a special allowance for passive activity losses from rental real estate activities, taxable Social Security benefits, IRA deductions, excludable savings bond interest, the exclusion of amounts that you received under an adoption assistance program provided by your employer, student loan interest deductions, or tuition and fees deduction. So for purposes of determining the adjustment to each of these items, the AGI is increased by the total of the amounts in lines 3 and 4. So if you didn't have any items in lines 3 or 4, then you shouldn't have to make any adjustments to AGI in line 6. And then in line 7, you're going to enter any adjustments that you might make to itemized deductions. So again, miscellaneous itemized deductions are suspended through 2025 tax year. However, You can skip this line if you use the standard deduction for the applicable year, or if the amounts on Schedule B, lines 3 through 5, are 0. Otherwise, you're going to have to complete lines 11 through 38 and then enter the amount on line 7 that you calculated on line 38 for your itemized deductions. Line 8 is for estates and trusts only. In this case, you'll enter the exemption amount that applies to you. In line 9, actually, you'll combine lines 2 through 8 to arrive at line 9. So if this is 0 or less, you'll enter 0, and then you'll need to see the form instructions, which basically say if 0 or less, enter 0. For line 10, the net operating loss carryover is whatever you subtract line 9 from line 1. So if this number is 0 or less, then you'll enter 0. After you've completed all applicable columns, then you'll need to carry forward to 2023 the amount, if there's any, on line 10 for the column for the preceding tax year. So if you go all the way through this and you've entered your net operating loss carryover, then you'll need to redo this for the first tax year, walk through this, and then if there's any amount remaining on line 10, you'll need to carry that forward to 2023. So we'll briefly walk through lines 11 through 38. These are the lines that if you are an individual with itemized deductions, you're going to need to follow this step by step. And again, you don't need to do this if you claim the standard deduction or if lines 3 through 5 on Schedule B were 0. So in line 11, you'll enter your AGI before the carryback. Then you'll combine lines 3 through 6 above. Enter that sum here. You'll add lines 11 and 12 to come up with a modified adjusted gross income on line 13. On line 14, you're going to enter medical expenses from Schedule A, line 4, and then on line 15, you'll enter your medical expenses from Schedule A, line 1. In line 16, you're going to multiply your modified adjusted gross income by the applicable percentage from line 3 on Schedule A. So that's depending on your age, you may have different calculations. I'm not going to presume that a straight calculation because there were a couple of years where during COVID the Schedule A medical expense percentage of AGI was adjusted. So it could be different based on your tax year that you're claiming. In line 17, you'll subtract line 16 from line 15. And if this is 0 or less, you'll enter 0. And then line 17, you'll subtract that from line 14 to arrive at line 18. So let's just assume that you have a modified adjusted gross income of $50,000. Let's say you had $5,000 of medical expenses on Schedule A and you had $3,000 on line 1. Then you would multiply line 13. Let's call this a 10% AGI limitation, right? So you would enter 10% of your modified adjusted gross income here, and then you would subtract line 16 from line 15. Since this represents 0, you would enter 0, and then subtracting line 17 from line 14, you would get $5,000 here. However, if you had, let's call this $8,000 of medical expenses on line 1, then when you subtract line 16 from line 15, then you would arrive at a $3,000 difference, from which you would then subtract line 17 from line 14, and you would come up with $2,000. So that's how that calculation works. For line 19, you'll enter mortgage insurance premiums from Schedule A, line 8D. Let's imagine you had $1,000 of mortgage insurance premiums. For line 20, because the mortgage insurance premium is no longer an available deduction, if it's treated as qualified residence interest, at least in 2022 and later. For tax years 2021 and prior, this is your modified AGI from Form 1045, Schedule B, line 13, more than $100,000. If so, you would have to go back to this number right here. And if this is more than $100,000 or $50,000 for married couples filing separately, then you would have to use the mortgage insurance premiums deduction worksheet located in the IRS form instructions. In this situation, this is less than $100,000, so you can simply enter the amount on line 19 without any adjustments. So, long story short, if your modified adjusted gross income is $100,000 or more, or $50,000 for separate filers, you may need to use an additional worksheet to recalculate this. But since we did not, we're now subtracting line 20 from line 19, resulting in a result of 0. And then for 2022, for line 22, we're going to simply enter the modified adjusted gross income from line 13, which is right here. We'll enter $50,000. You'll enter any NOL carryback that from a year before 2022 that was deducted to figure line 11. So if there was a NOL carryover, we'll call that $1,000 since that was carryback. You'll add these two lines, so 51,000. And then you'll enter on line 25 any charitable contributions from Schedule A, line 14, or if you're filing Form 1040NR, it would be on line 5 of your Schedule A. In line 26, you're going to refigure charitable contributions using line 24 as your AGI. So unless one of the following occurs, if you entered an amount other than 0 on line 23, you don't have to refigure charitable contributions. If you had any items of income or deductions based on AGI, which were listed in the instructions for line 6 above, if you had any adjustments here, you do not need to recalculate your charitable contributions. So if you cannot use the amount from line 24 as your AGI, you will need to follow specific instructions in the form instructions on calculating your AGI. And then once you, so for net operating loss carryover purposes, you must reduce your charitable contributions carryover to the extent that the NOL carryover on line 10 is increased by any adjustment to charitable contributions. So basically, you're recalculating your charitable contributions if the net operating loss offset any deduction from your charitable contributions. That way you can carry the contributions forward and apply the NOL here. So in this case, you would, if you had $15,000 in charitable contributions, but then you had to redetermine, or you recalculated and you were able to claim $12,000 of contributions, then that would leave you with a $3,000 difference. Then for line 28, you'll enter any casualty and theft losses from line 18 of your Form 4684. On line 29, you'll enter any casualty and theft losses from line 16, and then you'll multiply your modified AGI number by 10%, and this represents your floor. So let's just say you had $2,000 of losses and another $2,000 of losses. You would subtract line 30 from line 29. If it's 0 or less, you would enter 0. Then you would subtract line 31 from line 28. And then just below, apologize for this, line 38 says combined lines 18, 21, 27, and 32. So lines 18, 21, 27, and 32 would go here. So that's 5,000, 7,000. Would go in line 38, and you'll enter this amount here and then on line 7. So line 7 is the adjustment to your itemized deductions for this year. So we would carry that to here. So if you're a do-it-yourselfer, I strongly advise that if this tax situation applies to you, that you seek out the assistance of a tax professional, and because this can be complicated. Again, going through the form itself is not the complicated part. The complicated part is going back through possibly multiple years of tax returns, forms, and schedules to recalculate the adjustments that you need to make in order to properly calculate your new incomes based on your net operating loss, and then any carry forwards that you may have if you were not able to apply your NOLs and absorb them through your previous tax years. So depending on your tax situation, you may want to, at the very least, talk to your accountant about it, even if you do the calculations yourself. So that's all we have for this walkthrough. We've written an in-depth article which you can check out on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 1045 in the search bar, and our article should appear. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos and our walkthroughs, please subscribe to our YouTube channel. And as always, if you have any questions, comments, or concerns, please post them in the comments section or send me an email. Thank you very much.